Thanks for joining me this Friday, the 20th of June. I'm Grady Wolf, Senior Market Analyst with Bell Direct, and this is your weekly market update. Well, what a week that was on markets in what can only be described as a lackluster week, really stumping investors as direction and clarity on global scale was really difficult to read, thus resulting in the key index moving just 0.5% in the red direction. Middle East tensions rising dominated headlines throughout this week, causing President Trump to depart the G7 conference early to deal with the situation. The escalating attacks between Iran and Israel have surged the price of oil by over 10% this week alone due to supply concerns out of the major oil producing region, the Middle East. This has brought tailwinds for local energy stocks, with the sector gaining over 10% this week. With so much news and noise in the markets at a time where we've been hovering around record territory, investors have been reluctant to make any big moves, with a more sit and wait attitude displayed throughout this trading week. Retailers have faced a pretty turbulent run of late, with downgrades of FY25 earnings expectations, uncertain forecasting on consumer spend, uncertainty on rate cut front, and tariff implications on outlook, which is just many factors hitting their outlook right now. We have seen investors flee retailers recently, especially those who downgrade guidance or have had to implement high levels of promotional activity to move inventory in a time where consumer spend has been easing. Headwinds that are mounting for our retailers are more delayed than the market has had previously anticipated, as consumer spend remains so resilient for so long, well, until now, which we are seeing flow through to downgrades and low single-digit earnings growth being reported across the board. Cettire, Accent Group and many other retailers have been hit pretty hard lately by trading updates reflecting poorer consumer spend conditions that will impact the final quarter of FY25. So, any further delay in rate cuts out of the RBA will likely push out the recovery and spend for our listed retailers. KMD Brands, the owner of Rip Curl and Kathmandu, became the latest retailer this week to issue a profit warning, with sales down 0.5% in the first 10 months of FY25. There are still opportunities, though, in the retail space that capitalise on growing market segments and thematics like JB Hi-Fi, which is up 15% year to date due to growing demand for AI-empowered technology. So that's a bit of a different way to play the AI thematics. Iron ore miners have also struggled through over the last 12 months of turbulence governed by China's recovery and volatile iron ore pricing. Trade deals may be going in the right direction between China and the US right now. However, China's economic data remains concerning and weighs on the outlook for both iron ore price and for our big iron ore miners' results. The latest economic data out of the world's second largest economy continues to show a very mixed outlook for recovery in the region, despite multiple stimulus package announcements over the last 2 years really failing to make material growth and sustained recovery impact. China's latest GDP data showed the economy grew by 5.4% year on year in Q1 2025, maintaining the same pace as Q4 2024 and exceeding market expectations. So that was a tick there. While industrial output and retail sales are also showing signs of growth, so another few ticks. But on the contrary, the country remains in deflation mode and the property market continues to struggle. With such a mixed recovery picture, especially with the property front being a key indicator of steel demand, the iron ore miners continue to face mounting headwinds in 2025, which are likely to flow through to reflect in FY25 results. Locally, from Monday to Thursday, the ASX 200 posted a 0.48% loss as investors were sitting on the sidelines amid renewed uncertainty and global volatility. Energy stocks rose over 10%, while material stocks tumbled over 4% this trading week. The winners on the local market were led by Deep Yellow, soaring 27.72%, while Boss Energy rose 21.78% and Santos ended the week up 15.35%. And on the losing end, Evolution Mining tumbled 10.78%, while Neuron Pharmaceuticals lost 10.5%. On the broader market index, the All Ords fell 0.62% as a 32.22% surge for Bannerman Energy was offset by 30% sell-offs for Accent Group and Aurelia Metals. The most traded stocks by Bell Direct clients from Monday to Thursday were Woodside, BHP, Santos and Boss Energy. Clients also bought into CSL and Evolution Mining while taking profits again from CBA, Bank of Queensland, Macquarie and Westpac. So all financial stocks taken profits for there. And the most traded ETFs by our clients this week were led by Vanguard US Total Market Shares Index AUD ETF, Vanguard Australian Shares Index ETF, and Vanguard Diversified High Growth Index ETF. On the economic calendar front next week, we may see investors react to US durable goods orders, US GDP growth rate data, personal income, personal spending, and core PCE price index data, all out of the US throughout the next week, which will indicate the state of US consumer sentiment and inflationary journey in the wake of Trump tariffs and market volatility. And that's all for this Friday. I hope you have a wonderful weekend, and as always, happy investing.